Money FM 89.3. Best of breakfast. Companies to watch.
Good morning, and we have another edition of Companies to Watch to help you track what you should be keeping an eye out for. And good morning, Danko.
Good morning, Ryan. It seems like the topic that we're looking at today is constantly evolving, so we'll go with the flow. But welcome to Companies to Watch. That's a segment where we spotlight and stock you up with ideas of listed companies that will call for your attention. So we're looking at market trends to risks, as well as hidden gems or warning signs to steer clear of. 8855-0893 text us and tell us whether you think it's going to be a hot or not. Now, this is a hot commodity, that's for sure. And I'm talking about the global benchmark Brent crude oil, which is currently up about 20% so far since earlier June, in fact, and set for its biggest monthly jump since 2020 as the Israel-Iran tensions flare up. And although it's relatively contained, the rise has gone unnoticed in just 3 years after Russia's invasion of Ukraine triggered a surge in energy prices that has since ramped up global inflation and sparked aggressive interest rate hikes. And as we know it, the tensions that we've been seeing developing over in Israel and Iran has certainly done, in some ways, push the prices of oil up higher. In fact, earlier this week, just yesterday, oil prices rose sharply in Asian trade after U.S. strikes on Iran ramped up fears of supply disruptions in the Middle East. Both contracts had initially surged as high as 4% to 4 months high, with Brent briefly rising as high as $81 a barrel. But Ryan, it seems like we've got some good news today because oil prices are starting to settle, which is currently down more than 7% today after losing more than $5 a barrel after Iran took no action to disrupt oil and gas tanker traffic through the Strait of Hormuz, but instead attacked U.S. military base in Qatar in retaliation for U.S. attacks on its nuclear facilities. And I believe you have the live numbers for us now that you could break down for us. What's happening with Brent crude futures and the West Texas Intermediate crude?
Yeah, the latest developments, we are actually seeing a bit of a retracement of prices. So oil is down. You've got WTI lower by over 11%. Brent crude is also down by over 11%. So those monthly figures we talked about, we mentioned earlier, we are now looking at monthly rise of 7.9% for WTI. Brent is up about 6.4% for the month. So that's what we have right now as we see investors thinking perhaps it's not as bad as what they were bracing for. So in terms of the disruptions when it comes to oil facilities and so on, maybe too much initially was priced in the initial response, and now things are, well, I guess in some sense not as bad as what some were playing out in their scenarios.
Yeah, it seems like he's playing down at least the conflict of how Iran struck Qatar. And it does seem like, President Donald Trump is also fairly optimistic that, the tentative ceasefire in the conflict would suggest an end to the war that we've been seeing in the Middle East.
And then, of course, the Strait of Hormuz, that was a big one that we were kind of worried whether we would see that being restricted or would the supply routes restricted. Now, that's, I guess, pushed down the road. At least the can's been kicked down the road for some time. So in that sense, the prices of commodities, oil particularly, are reflecting that.
Yeah, but we still got to take note that, there was no immediate comment from Iran or Israel on Trump's post. And it seems like Vice President J.D. Vance had said that the president had been working the phones constantly on Monday with a goal of getting an agreement. So I guess with Trump's perspective, it seems like things have relatively calmed a lot better.
Relatively, I think that's the key word.
But in the case of Israel and Iran, we haven't yet received an official statement that ceasefire is here. But let's just talk about a case where it doesn't actually happen, where we've been seeing hostilities, just playing out across the region. So the conflict raging between Israel and Iran on Sunday, 22nd of June 2025, it took an escalating turn after the U.S. entered the war. They conducted an airstrike on 3 nuclear sites of Iran. And U.S. President Donald Trump did announce that they destroyed 3 nuclear facilities in Iran through a coordinated airstrike amid the Israel-Iran conflict. And in his words, Trump did say that there will be either peace or there will be tragedy for Iran that's far greater than what we have witnessed over the last 8 days. So it does seem like we've come quite far in terms of heightened tensions that would happen over the weekend. And after all, if we take a look at how Iran is involved within the oil market, they produce about 3.3 million barrels per day of crude, of which 2 million are exported. So given oil demand is estimated at about 103.9 million barrels per day by the International Energy Agency, and that Saudi Arabia and UAE are reported to be capable of raising production quickly by more than 3.5 million barrels per day. Some analysts did say that a severe disruption in Iranian production is probably manageable. But the concern was this. Iranian media did report earlier that the country was considering blocking the Strait of Hormuz in retaliation for the strikes. And that's considered to be one of the biggest factor in playing out, one of the biggest influencing factors of oil prices, and such a move stands to cut off a key shipping lane in the Middle East and could severely disrupt oil and gas supplies from the region. After all, the Strait of Hormuz is one of the world's most critical choke points through which a fifth of global oil and gas supply flows. So we're seeing it connect to the Persian Gulf, to the Arabian Sea and Indian Ocean, and the narrow channel, approximately 33 kilometers wide at the narrowest point, separates Iran from the Arabian Peninsula. But shipping lanes in the other waterways are even narrower, 3 km wide in each direction, making them vulnerable to attacks and threats of being shut down, which Iran has decided to do now. So, yes, it does seem like the hostilities between Tehran and Washington could see, the latter imposing more sanctions against Iran's oil industry as well, further limiting supplies to parts of Asia and Europe, and likely just trickling the effects of the war and the conflict between Iran and Israel to where we are here today in Singapore. So focus was now squarely on how Iran will respond, with reports suggesting that Iran could target the US military bases in the Middle East. That was what was first reported yesterday and over the weekend. But it seems like they have responded with just at least expected attack.
They did give advance notice that they would attack the airbase in Qatar. Maybe we could see more, but for now there is that ceasefire. And I'm just going to jump ahead here to look at what else could play out. And there are many moving parts when it comes to oil prices. You've got the demand equation as well. Now, with all this in the background, uncertainty, businesses cutting activity, consumers being more cautious, that could also play a part in the demand side of the equation, right? So that will play into prices. So that's definitely one area to watch out for, considering how already there is a lot of avoidance of that Middle East region when it comes to freight routes, which then in turn means freight costs will be higher, so that's going to be passed down the value chain. Then you have also flights, just avoiding that place, and then that's also going to mean shipments in some cases will be delayed and maybe even cancelled. So that's another part of the equation. Then at the same time, you've got the summer demand for oil. That's going to be supportive for prices. So yet another moving part there. So a lot of uncertainty of how oil prices are going.
Yeah, it does seem like there are tons of moving parts that we have to juggle with here. But if we take a look at how, historically oil has performed in times of crisis, if we look back to Russia's invasion of Ukraine back in February of 2022, Brent prices rose by 30%. But as of now, they were back at their pre-invasion level 8 weeks later. So much will, of course, at the end of the day, depend on how long the Israel and Iran conflict lasts and how it escalates. So according to some analysts, the effects of anything short of a major disruption in a Middle Eastern oil output is likely to be contained. For me, I think verdict, as of now, given the volatility, I'm going to go with a hot.
I am stuck on the fence here. So I'm also looking at the likes of Chevron, the likes of ExxonMobil, and those share prices are going down. Back home from Rex International, RH Energy, also oil and gas plays. They enjoyed a day of a bit of a bounce yesterday, but I think we could see some pressure today. So it's been back and forth, so I'll go with on the fence. Is there an option for on the fence?
I'll give you that option for today, Ryan. But as of today, the 24th of June, it seems like Bloomberg Intelligence, in a research note, they did note that the near-term forecast for Brent crude is within the $80 to $90 range. Goldman Sachs estimated Brent crude could briefly peak at $110 per barrel, but could remain down by 10% if tensions ease. And that pretty much wraps it for our analysis of today's topic in focus, oil. Now, here's a fun fact about oil. Now, oil is often referred to as Texas tea or black gold, seeing the important role it played throughout the world history. I mean, they've been used for binding materials and, waterproofing various surfaces as well. It's also used to power vehicles today and used to create medicines, recreational sports items, cosmetics as well. And we know that oil is normally measured in barrels. So, Ryan, how much gallons or liters does that equate to?
I'm not sure.
A barrel. Any guesses? Okay, how many liters a barrel?
Should I think about it? 200 liters.
Close. It's about 159 liters or 42 US gallons. And that's all we have for today's topic, oil.
Before acting on the information on Money FM, please consider if it's suitable for your own investment objectives, financial situation, and risk tolerance. To listen to more great interviews, download our podcasts at audio.sg or download the audio app. That's AWEDIO, audio at the App Store and Google Play.